All right, the Dow 88 points right now. So we came about half our gains a little bit earlier. Let's get the read on all of this. The market's sort of nonplussed by the talk of growing trade wars and the like, perhaps because maybe as Stu Eisenstadt was just raising with us, Jimmy Carter's former top domestic policy advisor, they don't see it happening. Who knows? Deirdre Bolton is with us, market watcher. Stephen DeSarge Guilfoyle. We were just going through that whole background there. I'll spare you those details. And Christina Parts-Nevelis. Stephen, is it your sense that markets ignore this, the trade threats and fears, because they don't think they're going to be realized?
Well, they certainly haven't ignored it. I think the fact that the market expects some kind of favorable resolution to most of these issues is the reason why you've seen large caps gaining on small caps over the past couple of weeks. I mean, the Russell's up, what, like 8% this year? The larger caps are up maybe 3%. We've seen a little bit of a reversal there. You might get a little risk off this weekend ahead of the G7 summit, but I think we are headed in that direction unless something blows up on us, which is always possible.
So you're buying in this environment?
Oh, I peaked out. I went to very high cash in January into February. I peaked around 46%. And I've been putting money back into the market. I'm down in the low 30s. I'm still at a high cash level for a Wall Street guy, but I'm at much lower levels than I was, and I do intend to get there further. I also have been raising revenue by selling puts in almost all of my long positions. This way, if the world...
What are you buying, though?
Oh, boy.
You don't want to.
Well, no.
What themes look good?
No, I've always been long tech. It's always one of my main sectors. But I'm focusing on the cloud names. I'm focusing on the semiconductor names. They're getting kicked in the teeth a little bit today. Mm-hmm. But that's where the growth is. That's where the potential lies. I also think energy looks good right now. I mean, it's a little bit dangerous, but the 64 level seems to have held the WTI crude. I've been focusing on oil services such as Halliburton and Schlumberger, but I'm tipping my toe into the Exxons and the Royal Dutch Shells.
Christina, it's interesting when you look at technology because every time you think it's about to get beaten down and go into a correction phase, it doesn't.
Especially
it comes back.
Yeah, you're seeing it very strong, and I think there's a few reasons for that. First, technology is seen as an interest rate play. When interest rates potentially rise in possibly 2 weeks, right, you have technology where the raw materials are not as high as, let's say, semiconductors, and so they can increase their margins more than other companies. And then you also have the fact that it's always a growth story. A lot of analysts, people say the fundamentals are there. So when you're looking at revenue earnings for these tech stocks, there's a lot of opportunity. And so I think those are some of the major drivers. And last but not least, the tax cuts. They brought back a lot of money into the United States. The tech sector as a whole really benefited from shareholder buybacks. And so that's been pushing up the stock price as well.
You know, Warren Buffett, no fan personally of the president, says that this economy and this economic growth is very real. I think he used the analogy we're in the 6th inning.
Right.
And the heavy hitters are coming up. And I think the reference was a 9-inning baseball game, so we've got at least a third of the way to go here.
No, and the World Bank said yesterday that it sees growth this year, 3.1%, which matches last year's and is the best year on record since 2011. So to all these points where the idea is that earnings will continue to improve, what Christina said about technology is true. I mean, I think whatever field you want to invest in, there's some tech angle to that. So I think a lot of those tech stocks are very safe plays. But the idea is that earnings is going to deliver and kind of trumps any trade worries. Now, if it's a trade war, that changes things. But just trade worries, I think, we've seen the market.
Well, you mentioned the possibility of the trade war. Also, the half-empty glass is that it does erupt to war and that it goes back and forth, and gets nasty.
Well, Deirdre brought up earnings. Earnings look good next quarter as well. And as far as the 6th inning of a ball game, what if we play a doubleheader? All right, we may have a ways to go.
I see where you're going with that. All right.
I think we could have a little bit of a melt up here in the over the summer. I mean, yeah, we could run into growth problems in a year and a half or so.
We've had a little mini melt up this last week or two.
Yeah, we certainly have, especially in the retail space. But that's what happens when you have a whole group of managers who miss an industry group that moves, and then you have a large short positions on top of that, so the chase is on. And the chase is still on. Look at those names today. I mean, they've been up day after day. Today, the market's a little sloppy, but those names are still higher.
And I think for Q1, they've been pricing this in for quite some time. I think investors were unaware of how to deal with public negotiations. We talk about trade that was never in the limelight. Now it is. So we have to figure out how we're pricing that in. Q1, they did price it in. Now, we may see some swings. I think that's because also going into the summer, you see lower volume. And so any type of headline could potentially swing the markets. And there was one interesting stat from JP Morgan that I don't know if you saw it, Deirdre, but came out saying that they looked from March when all of this trade talk came out, and essentially net loss for markets was negative 4.6%. So these trade talks have wiped off over $1 trillion on the market. So it has had a negative effect.
But it's not going to stop this.
No, and you just mentioned J.P. Morgan. CCAR comes up in a couple of weeks, and over the last few years, we've seen tremendous moves in the bank stocks in the second half of the year. So I am long J.P., I'm long Goldman, I'm long Citigroup. I'm
That's
expecting.
not just an interest
Fed.
rate story to you, right?
No, that's not. That's a buyback and dividend story. That's where I think they're going to throw some money at the shareholders. And I think interest rates, we saw a little space this week between the 2 and the 10. I think the spread was up to like 45 this morning. It's down back down to about 43. But that's where the real money comes from in banking. But as long as they're going to throw us some money, we're going
You'll
to take
take it.
And they're throwing around a lot of money. Guys, I want to thank you all very, very much.